Hello and welcome to a new warning briefing presented by Stein Investments. I'm Daniel and I would like to show and explain what we can currently see in our volume power overview. What hops in the eyes at a glance is that we can see a rising interest in euro short positions and also a rising interest in US dollar long positions. And while the euro USD is the most traded pair in the world, I'm pretty sure this is related. So we can also see that the euro is still hovering at a neutral area of the FX power scale, while the US dollar dominates here for several hours now. And I guess we will see the exact same situation if we analyze the major pairs directly. So let's start with the euro pairs to see if this euro volume trend is really related to the euro pairs or something else. So I'll jump through these pairs pretty quickly, and you can see euro USD is clearly going down, and while it's the most traded pair in the world, I guess this entire volume change comes from here. Because if we check all the others, like euro, British pound, you can see they are both weak, nothing happens, it's ranging. Euro, Aussie dollar, there is a pretty young breakout setup. I'm not sure how trustworthy it is, but we will come back to this at a later point. Euro, New Zealand dollar, also ranging. Euro against Canadian, yeah, it dropped a bit, but currently sitting at a massive support area, so no chance to trade it here. Euro Swiss franc is also ranging, and euro against the Japanese yen is also ranging. So even though there is a massive euro net long volume trend in the sell direction, there is currently no favorable setup or promising setup to short the euro against the other pairs. And going back to the euro against the Aussie dollar, we need to consider that all cross pairs are dominated by their major pairs. So if we expect a move here on this cross pair, we need to analyze euro USD, which is going down, but also the Aussie dollar against the US dollar, which is also going down. And if both of these are going down against the US dollar, it's highly unlikely that euro against the Aussie dollar will move at all. It will probably range until both of these currencies make a move in opposite directions. So let's analyze the situation on the major pairs, which may cause the long trend in the US dollar net long volume. So starting with the euro against the USD, it's pretty clear. You can see there is a clear down move during the last hours. The situation of British pound against the US dollar is the same. Aussie dollar against the US dollar is also the same. So yeah, with this in mind, we can draw the conclusion that the volume trend here in the euro is a clear result of this massive long trend in the US dollar pairs. And if we now analyze the situation on the US dollar with the long-term trend here still on the weak side, it is obvious that the recovery is currently running with full steam. You can see it at these straight moves. You can see that the short-term analysis is constantly above the midterm and the midterm above the long-term analysis, and the deltas between them are constantly growing. So you can see how all these lines rise. Currently they are both here on the strong side of the scale, and if this move continues the entire day, I guess we'll end up with the long-term trend in a neutral area in a few hours. So how to deal with this dynamic trend here in the US dollar? The main problem is that if we consider taking new trades, we need to find reasonable stop areas. And the problem is that after such a long run in one direction, we have to place the stop pretty much far away. And this makes it difficult to reach a reasonable risk-reward ratio, because we can't place our profit targets endless in the opposite direction. It makes no sense at all. So it's probably best to await a reversal move and then jump back into the direction of this trend if the price ends this reversal and goes back in line with the dominating trend today. We can see in all other pairs that it's tricky, and the stop areas are pretty far away. EUR USD, the stop loss should be placed here. British pound here above the last resistance. New Zealand dollar, it's even far away. You could place it here, but you get the idea. It's definitely not the best situation to hop in new trades, even though the dynamic numbers show all green. But honestly, I would recommend to wait for the reversal and try to get in when the reversal ended. Then you will have a much better risk and reward ratio for your trades. So let's have a look at the currency overview, and the only clear trend I can see is the British pound is going down, but what is missing is a counterpart that is clearly strong. The US dollar is strong short term, but that's not enough in my opinion to trade this as a pound US dollar short trade. We need to see the US dollar line, the long-term US dollar line above the 0 level, and then it's okay. You can see we have twisted situations on almost all currencies. Euro was strong a few hours ago, then went back to the weak area, but I can't trade weak against weak, so it makes no sense. Canadian dollar is twisted, Japanese yen is currently twisted, New Zealand dollar, it's unclear, it's hovering around the neutral area. The Aussie dollar is getting stronger, but I prefer to see all those lines stable above the neutral level for several hours before considering a trade, as I did yesterday. With this in mind, let's move on to the recap of the trades we took in yesterday's morning briefing. And I would say we start with the loss. It was honestly a stupid loss because I set my stop loss way too tight here in this area. It's just completely nonsense. No idea why I did that, because the correct stop loss area would have been here above this resistance, which was there yesterday already, and or at least here above this mini M5 high, but surely not in the middle of this crowded area here. It was just a stupid idea to do it, but it also reminds me of how important it is to set the stops precisely. So let's move on to the more positive trades. The Aussie dollar against the US dollar worked smooth as butter. We have a clear line split here. The Aussie lines are all on the strong side. The US dollar lines are all on the weak side of the FX power scale. It worked perfectly fine, and I closed it at the end of the London session. The New Zealand dollar against the US dollar worked even better, because in this case the trade reached its profit target at the 100% ATR line drawn by FX Dynamic, and this area marks now a new resistance, and I hit the perfect high before the price went down, turning into a completely opposite situation today during the Asian session. So let's continue with our non-forex symbols, starting with the Bitcoin as usual. And the Bitcoin is still neutral in a long-term analysis, but with some interesting buy dynamic. Unfortunately, it currently hit a pretty massive resistance level here in this area, so not sure if there is enough dynamic to break through it, but yeah. Let's move on to oil, and we'll see oil seems to have ended its downtrend, at least for a while. It's still very weak in the long-term and mid-term analysis, but seems to establish some kind of support level here in this area, which you can also see at these two pretty new support zones drawn by FX levels. Yeah, not sure what to do with that. It might be possible that it goes further upward, but the situation is unclear, so I wouldn't trade it today. The situation on the indices is a lot better, with an extreme buy trend in the long and midterm. But please keep in mind, this is only New York pre-market, and we see that today's range is only 20%, so not that much. And I can also see there is currently no recent resistance level above the price, so possible targets for long trends are these ATR levels drawn by FX Dynamic. So the German DAX, yeah, is also in an extreme buy trend already, but it's hitting a resistance level here in just a few pips, so possible that might see a reversal move when it hits this resistance level, and then it might go along further upwards along with the US indices. So that's the end of our market analysis for today. I'm really sorry that I couldn't provide you any promising trading opportunity today, but that's how it is. There is not every day a new opportunity that is promising enough to risk real money on it, and so if that's not the case, I don't recommend anything just to have some adrenaline and gambling trades. We trade professionally, and we risk our money only if it's worth it. I hope you enjoyed our content anyway, and I'm looking forward to more of your subscriptions. Thank you very much for your attention. I enjoyed it, and I hope to catch you in the next one. See you, and bye-bye.